Once again, good morning, everybody. My name is Patrick MontesDeOca. Welcome to the live streaming VC PMI Early Bird Update Report for January 23rd, 2020. One of the things I want to do here basically is take a look at the gold market, which is trading last at 1562. And we want to see what the numbers are telling us for today. But one of the things that I want to do especially here is take a look at the market on the daily, the weekly, the monthly, and the annual numbers that we're looking at. On the chart that you see here on the left, we have the day trading numbers for today's trading, for today's session, and the average price has been identified as 1556. One of the things that I do here primarily is to trade for my account here in Tocker is I use the reversion to the mean principle for the supply and demand of the market for day trading, for swing trading, and for position trading. As a self-directed trader, or if I can share as a trader myself, one of the things that is important for me is to know the relationship of the market short term to the intermediate term and to the long-term data that we use. And just to clarify, the data that we use primarily has already taken into account any fundamental news that may be out there. So in putting together this report, for the purposes of explaining the automated algorithm artificial intelligence, it is really not important, or you might say a waste of time, to review those fundamental news, government data, which most of the time is erroneous. Most of the time is not a fact, even coming from our own government regarding our economic indicators. I think if you do a little bit of digging and research on your own, you're going to be able to see that the fundamentals, particularly in terms of the debt, in terms of our fiscal policies that we have, are very ambiguous and not clear. And so for me to take into account this analysis in an environment that is algorithmic, it's counterproductive, as I said, to accomplish the goals that we want, which is to provide an identified, very specific trigger points for self-directed traders. So what I'm going to do on this report is I'm going to extend the report a little more and get into the data that we're using with the artificial intelligence behind the algorithm. And so for day trading, basically the market has identified an average price of 1556. The extreme below the mean is 1551. And the buy 2 level below the mean is 1546. Now, the average price is a 50-50 standard deviation, relative implied volatility factor 1-to-1 to the buy 1 level, which the algorithm identifies it as a 90% probability that if the market comes down, it activates the setup from neutral and the signal comes in and then closes above that pivot point that we're using, it's considered a trigger point. As you can see here, the market on the 21st at 6:45 a.m. activated a trigger point. This is a buy signal. Automatically, when the signal is activated, the target is the level above. And in this case, the 1556 target was completed. I'll get into more in terms of the analysis of the market, but let's take a look at the numbers here above the mean. The sell 1 level above the mean is 1561. The sell 2 level is 1565. Now, if we look at the market on today's action here, the market came down into obviously the almost touching the buy 1 daily level of 1551. This is considered completing the target, completing the criteria necessary to activate the algorithm. And in this case, for self-directed traders, coming down here, and we suggest, if you follow this on a self-directed basis, to use about a 10% margin of error. So because my experience is that the market can come down to a level close enough and maybe doesn't touch it, and most of the time it leaves you behind. And so I use a 10% margin of error. And if you're in the room at 4 a.m. and and the market is down here, you can see that it reverted from this level, because what the artificial intelligence identifies this area in blue is that it is the beginning of the demand area, and the algorithm tells you that potentially expect buyers to come into the market. And so it found buyers at 1551.30. The market reverted right back up, activated a buy signal, and the target was completed automatically at 56. And it went neutral. So, that's a $500 profit day trade from, 4 o'clock in the morning to 5:15. That's not a bad trade if you are up during the time. One of the greatest things the VC PMI automated algorithm does here for self-directed traders is that you can use this as a GPS for your trading when you start to trade. When you turn on your computer and you take a look at the market, that's when you begin to apply the artificial intelligence. When the price activates any of these pivot points during that time frame, that's a setup for you. Or it is liquidating the previous position. Good morning, everybody. This is Patrick MontesDeOca here. We've had a little bit of time here gone by, and I believe that we had some technical issues here, but I want to make sure that you do get this report. It is a special report for January 23rd, 2020. And on this report, we're going to take a look at the market basically in gold, trading last at 1560. And one of the things that I want to do on this report is take a look at the daily, weekly, monthly, and annual signals and what they're telling us here moving forward, and pretty much what they have done here. Um, if we take a look at the chart here, the daily price data on the left, the average price is at 1556, and the extreme level below the mean is at 1551. The buy 2 level is 1546. The extreme levels above that mean is 1561 is the sell 1, and the sell 2 level is 1565. One of the things that I teach my trader subscribers here in Tocker, and I myself as a self-directed trader, use this metrics, a proprietary algorithm that it was written in C++ in TradeStation. And it basically trades the reversion to the mean principle of the supply and demand factor. It identifies a very perfect Fibonacci structure of 5 pivot points. It identifies the average price and the extreme levels above that average price and below that average price, giving you the relative implied volatility factor, which is basically on the sell 1 level, it's 1-to-1 to the mean. The sell 2 level is 2-to-1. The same thing for the buy 1. It's a 1-to-1 relative implied volatility factor, and the buy 2 level is a 2-to-1 relative implied volatility factor. Now, the algorithm, when the price comes down to this level, activates a setup, basically, an alert, and because the artificial intelligence behind the algorithm tells you that if the price comes down into the buy 1, buy 2 level, it is the highest probability where you're going to find buyers, where you're going to find demand. And so it's the extreme below the mean, and pretty much that's what I suggest my traders, that's what I teach as a self-directed trader, to take the least amount, the least path, the path of least resistance in essence. And in that case, wait for the algorithm to identify the highest probability trades, and that is by coming down to the buy 1 or buy 2 level, and or going up into that sell 1, sell 2 level that we have. The sell 1 level has a 90% probability, and as we speak, we are getting a setup right here. This was the profit target completed from 51 to 61. If you kept your position, that's about $1,000 profit from the extreme below the mean. So what I teach my subscribers here is basically how to trade the reversion to the mean. Now, one of the things that I want to point out here is that the algorithm basically, as it is written here, it takes into account all the fundamental news that you read out there, whether it be from government data, or whether it be from individual data that is published on the internet, and this data previously, obviously, or even when it does happen, it has a tendency to move the market in price, and that's not necessarily because it justifies the mean, so to speak, but it's speculation. And when the price, what I call, experiences the rubber band effect, it reverts back to the mean. When you take the price to an extreme level, if we can use this as an explanation for you and explain the physics of the math when you push the price from below in red, or I would say from blue, which we are right now in demand, okay? When you push it to the extreme above, in this case, the extreme above the mean in red, you get a reversion back. This is the natural law of physics of the reversion to the mean principle. And as you can see here, the mean will always come back to the mean, halfway. If we push the prices the other way around, it comes back to the mean. So pretty much what I did is I automated the algorithm to trigger basically the signals that are identified by this very specific criteria that we're using, and that's the intelligence that I am teaching you here. And so the market right now is trading. It's given us an alert, and the close of this next bar identifies the trigger point at about 7:30 Pacific Standard Time. And so if you take a look now at the right of the chart, you'll see some figures that basically represent the weekly numbers. And in this case, the weekly average is 1553. The extreme level above that average is 1570 on the weekly. Now, I said to you that the VC PMI is a 50-50 standard deviation, and what we look for is to trade 50-90 standard deviation. So that would be the sell one level of 1570, that once the price reaches there, it completes the target from below, and we wait to see what the price does to see if it activates a trigger point. And so the thing that where we are right now is basically we are overbought on the daily, okay, and the weekly is in a bullish price momentum. So we're getting a bit of a mixed signal here on the daily to go short on a close below 1561 for day traders, but weekly swing traders are still in a bullish price momentum. So this is the dilemma of a trader when you get an indicator short term to be, counter trending, so to speak, or contrarian to the weekly trend. So let me tell you basically that what I want to do here is to expand a little bit more into the analysis and go beyond the daily and weekly, and I want to bring up the monthly and the annual report and see where it is in relation to that. On this chart here now, we're taking a look at the monthly numbers on the left of the chart and the annual numbers on the right of the chart. I want to get a little more perspective here on where we are and where we have been here in terms of the monthly numbers now that indicate the market has completed the sell to level on the monthly, basically. And from the buy that we had back in blue here, in fact, let me open up this a little more and see where that came in here. And as you see, the buy signal here in the gold market came in on the monthly numbers, obviously around the middle of May. And around the middle of May, the annual report had a buy one level at 1268 and the buy two level at 1031. This is the annual number. This is the numbers that we were able to identify on a report that we published in Seeking Alpha on September 28, 2019, in using the 360-day cycle from September to September is what we use, and it gave us these numbers. 1268 to be the buy one with a 90% probability on the annual numbers that if the price comes down to this level that we're going to see a reversion to the mean. And so on May 30th, the market made a low of 1302.40, and when we wrote this report, basically the market was trading at about 1490 in that vicinity. It never really activated and followed through the short signal down to the mean again of 1417 and came down to meet the low of about 1459, which was basically the 9-month moving average that we used, that we published in Seeking Alpha. The report, the reports that I do, which I share with my subscribers, basically is the easy language code simplified. And I do it because I want to use it for myself. Once I write the report, I basically look at it as a trader and create my strategies, which I share here in Tocker and verified by Tocker. What I wanted to show you is the report that we published on September 30th of last year. The annual targets and supply and demand prices for 2019-2020 season. And on this report, you can go there and look at it a little more closely, but for the purposes of this report here, a summary of it was with the market closing at 1506 at the time of the report on September 27. It activated a bullish trend momentum for the rest of the period into 2020. The fact that the market closed above 1417 activated the targets of 1655 to 1803. Conversely, the first level down is a close below 1454, which is the 9-month moving average, which would negate this bullish trend momentum to neutral. It never came down. It never came down below that level. As you can see here, 51, 57. The low was 1461 on November 11th. And at that point, it found buyers at a higher level than the average price of 1417. The market rallied, and it is in a bullish price momentum on the annual data because the market never came down even to that 1417 level. So where do we go from here? As we take a look at the annual numbers, the market is trading in a bullish price momentum. It activated the target of 1654 is the annual target for 2020. This is a 1-to-1 relative implied volatility to the annual mean of 1417. If the price does not activate a short trigger point from the 1654, if accomplished, it activates the higher targets of 1803 for 2020. Where we are right now on the monthly numbers, we have accomplished the sell-to level monthly of 1570 by the market basically reaching 1619.60 on the 8th of January, which, by the way, was, I believe, the Iranian conflict. And you can see here that the price discounted that. It met the target and it came right down to adjust to the sell-to level, which is about a high probability level that if the price triggers a short signal, that it could revert from here. The thing is that if it doesn't revert, as you can see here, and it just trades within the band of the sell 1, sell 2 level, basically the algorithm is waiting to close above 1570 on the monthly chart now to activate that 1654 target, which is what I'm looking for as a self-directed trader on the balance of 2008 that we potentially can see 1654. So when the price closes above the sell-to level, it looks at and connects right to the next trend and the next cycle, and in this case, the annual data comes into place as we close above 1570. Let's go back to the current month, to the current continuation chart in gold, and see that we've pretty much, we're stabbing right into the sell 1 and sell 2 level daily, and so we want to allow the market to do what it's going to do. And based on where we are right now, if you choose to take a short trade and activate a short trade from the sell 1 level, make sure that you use the stop above on the 15-minute bar to get you out. And Your target would be that 1565. The one thing I want to point out is that when you go short from the sell one level, whether it's daily, weekly, or monthly, it's only a 10% probability that the signal would be successful, as opposed to a 90% probability. When you buy above the market, it's a pretty low probability between sell 1 and sell 2. Nevertheless, the market can still prove that there are more buyers that can take the offers or the selling pressure and supply, and it will reflect in the price basically closing above 1565, which is the sell 2 level daily, and then taking into account the weekly target of 1570. Once again, closing above 1570, we bring in the sell 2 level of 1580. And so you can see how these levels in price begin to connect the daily trend with the weekly trend and the monthly trend. I hope that I was able to clarify some of the work I do here. It sounds a bit complicated. I know if you hear it the first time it can be overwhelming, but it's really not once you begin to understand the dynamics of the VC PMI AI, that it gives you these levels. And what I teach here in Tocker and at the Equity Management Academy is basically how to identify the trigger points that are provided by this perfect Fibonacci sequence using pivot points and applying the reversion to the mean principle of the supply and demand. That's a mouthful. This is Patrick MontesDeOca. It's a pleasure to do this here, and I hope that you are able to benefit by this incredible intelligence that I've been privileged to understand. It's my pleasure. We're going to be live streaming here throughout the day. Please stay with us. This is Patrick MontesDeOca. Have a fantastic trading day. We'll talk to you soon.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.